China's inflation just surged past expectations in April 2026, driven by unexpected global pressures. You need to know why this matters for your wallet and the economy now. In April 2026, China's inflation rate beat analysts' predictions, highlighting an uptick in consumer prices. This increase is notable because it reflects stronger inflationary pressures than expected, suggesting that both producers and consumers are facing rising costs. The data points to a shift in the economic landscape after months of relatively stable inflation, raising concerns about cost of living and business expenses across the country. One key driver of China's inflation surge is the Iran war, which has significantly impacted global supply chains and commodity costs. Producer prices in China reached a 3-year peak as the conflict drove up the cost of raw materials and energy. This ripple effect is pushing manufacturing expenses higher, which then trickled down to consumer goods. The Iran war's impact on oil and metals prices is a central factor intensifying inflationary pressures within China's industrial sectors. The rising producer prices mean Chinese manufacturers are paying more for materials and energy, which squeezes profit margins unless they raise prices. Consumers then face higher prices for everyday goods, from food to electronics. This inflationary pressure can slow spending and economic growth if wages do not keep pace. Both businesses and households in China are feeling the pinch as supply chain issues and geopolitical tensions create a cost squeeze. Looking ahead, inflation trends in China will depend heavily on how the Iran war evolves and whether supply chain disruptions ease. If the conflict intensifies or drags on, commodity prices could rise further, pushing inflation higher. Conversely, improvements in global trade routes or diplomatic progress might stabilize costs. Policymakers in China will need to balance supporting growth while curbing runaway inflation to avoid economic overheating or recession risks. For individuals and businesses, understanding these inflation dynamics is critical. Rising prices can erode purchasing power and increase living costs. You might want to reassess budgets, anticipate higher expenses, and explore ways to protect savings from inflation's impact. Monitoring news on the Iran conflict and China's economic signals will help you make informed financial decisions as the situation develops. China's inflation beating estimates in April 2026 signals rising costs for you and the global economy, fueled by geopolitical tensions like the Iran war. This means higher prices at stores and challenges for businesses. Staying alert to these changes can help you navigate your finances smarter. For more updates on how global events impact your money, subscribe to Daily Q&A now.